Hey everybody, Rob Maurer here, and today we are of course talking about Tesla's Q3 delivery and production report, which Tesla released today, Friday morning. And I'm sure by now most of you have seen that Tesla announced record deliveries and record production. We'll get those numbers out of the way right away. So for deliveries, Tesla came in ahead of the FactSet consensus estimate, which was around 136,000, and delivered 139,300 vehicles for Q3. The breakdown of that was 15,200 Model S and X, and 124,100 Model 3/Model Y. Last year in Q3, Tesla delivered 97,000 vehicles, so this is up 43% year over year. Even comparing to Tesla's best previous quarter for deliveries, which was Q4 of 2019 at about 112,000, this is up 24% to that previous record. Flipping over to production, the production numbers are even better. Tesla produced 145,000 vehicles in the quarter, just under 17,000 Model S and X combined, and just over 128,000 Model 3 and Y combined. Compared to last year's Q3 production of 96,000 vehicles, this is up 51% year over year, and compared to Tesla's previous record quarter, which again was also Q4 2019, of about 105,000 produced, this is up 38%. Despite this beat of analyst expectations, again the FactSet consensus was about 136,000 deliveries, Tesla is currently down about 5% in pre-market trading. We'll see how that changes throughout the course of the day, but the macros are down right now. The Nasdaq in futures trading is down about 2.3% ahead of open on the news that President Trump and the First Lady have both actually tested positive for COVID-19. As for Tesla, personally, I am thrilled with these numbers. As we talked about yesterday, I had forecast production at 144,600 vehicles, so Tesla actually topped that slightly. And then I had also forecast 142,600 deliveries. So Tesla did come in a little bit below that. But as I said yesterday, the reason I start with my production forecast is because that's what I care about more. That is the limiting factor, I think, in terms of Tesla's deliveries. I think if they had produced 150,000, they could have delivered 5,000 more vehicles. Tesla even notes in their delivery announcement that, quote, in terms of days of sales, new vehicle inventory declined further in Q3 as we continue to improve our delivery efficiency, end quote. So even though inventory did grow, it actually fell in terms of days of sales because Tesla is selling more each day. As we talked about yesterday, at the end of Q2, Tesla had 17 days of inventory on hand. So they're saying that number actually dropped, even though Tesla is already dramatically lower than other automakers on that metric. Generally, other OEMs range from about 70 to 100 days of inventory. So Tesla operating at just about 20% of that level. The reason that I forecast production to be higher than deliveries, and again, a big part of the reason why I think the actuals came in that way, is because as Tesla ramps up production, the final week of the quarter is always going to continue to be more vehicles produced than the final week of the previous quarter. And those vehicles that are produced at the end of the quarter, it's just difficult logistically to get those fully delivered to a final customer in such a short period of time. So as we discussed with the forecast, this overproduction to deliveries should not be a surprise for this quarter. To me, it is not a negative at all. It provides extra inventory for Tesla to potentially deliver during Q4, which, speaking of Q4, Tesla year to date has now delivered 318,687 vehicles. So to get to 500,000 and meet their original guidance despite all of the production shutdowns from the coronavirus situation, Tesla will need to deliver 181,313 vehicles in Q4. I definitely think this is possible. As we had talked about yesterday in the forecasting episode, my Q4 production forecast at that point in time was just over 180,000 vehicles. So if Tesla does produce around that many and they continue to drain down inventory, it would be a little bit tight. But with that level of production, I think Tesla can deliver that 181,000 and still meet that original guidance. So let's again look back to my production forecast and see how this may translate over to Q4. Things were pretty close here, so I'm just going to leave the numbers from yesterday. But if we look at the Model 3 Fremont production rate, I had forecast around 4,750 per week out of Fremont. And for Q4, I'm only projecting 4,800 per week. So pretty similar levels, meaning that Tesla doesn't really need to increase the production from Fremont Model 3 at all to have a chance at meeting annual guidance. For Model Y, that's where the increase needs to happen. I'm projecting an increase from about 33,000 produced in Q3 up to about 55,000 produced in Q4. That is even slower than the ramp that we had seen from the Model 3 when it was sort of at this point in its life cycle. From Q2 2018 to Q3 2018, Model 3 production jumped from about 28,000 to just over 53,000. So that was about a 25,000 increase quarter over quarter. And in this case for Model Y, I'm only projecting a 22,000 increase quarter over quarter. So this is not some unprecedented growth that needs to happen. Tesla just needs to do for the Model Y what it did for the Model 3. And obviously Tesla now has the benefit of having gone through Model 3, learning from that process, and having the Model Y be a relatively similar vehicle to the Model 3. So for Fremont, I think that's doable, 135,000 there between the S, X, 3, and Y. Then the balance of the increase I had coming from Shanghai. This quarter, I estimate that to be around 33,000. I have that increasing to about 45,000 in Q4, but there are a couple beneficial factors there. Number one, Shanghai was shut down from September 20th to September 30th. I've heard reports that even though it is the China national holiday from October 1st to, I believe, October 8th is when workers return, Tesla, since they had that shutdown, is planning to work through that, is my understanding. So I pretty much expect a full 90 days or so of production this quarter versus the roughly 80 that they would have had in Q3. And then we also heard reports that Tesla is hiring a third shift. So going from 2 to 3 could ideally increase production output by 50%, and that's not even what I'm forecasting for here. So again, for Shanghai, I think this is also relatively achievable. There might actually even be upside in both of these cases. Again, the Model Y ramp could actually go better than the Model 3 ramp. Model 3 production from Fremont could actually accelerate again like it did from Q2 to Q3. And then Shanghai, if that 50% number comes to fruition, or if the other two shifts make any progress in terms of their output and production rate, then we could see a beat across pretty much any of those metrics. So I am liking Tesla's odds of being able to produce the required amount of vehicles to be able to deliver 181,000 and hit that annual guidance, which is just insanely impressive. Not a lot of people were expecting that back in March through May. A couple of final comments here. We will have the Q3 earnings report coming up here in a few weeks. It'll be really interesting to see how this translates to the bottom line. Remember, in both Q1 and Q2, Tesla was able to eke out a small profit on deliveries of 88,500 in Q1 and 90,900 in Q2. So for Q3, we have now added 50,000 deliveries onto that. That's a 53% increase sequentially quarter over quarter. And I can guarantee you that operating expenses are not also going to increase by that amount. They're not going to be up 53%. So a lot more of this revenue is going to fall to the bottom line. This is going to demonstrate Tesla's economies of scale and the operating leverage that Tesla is starting and will continue to generate as deliveries scale up. So I'm super excited about the Q3 earnings report. I would expect that to happen on Wednesday, October 21st. If not, it would probably be on Wednesday, October 28th. And of course, as usual, sometime ahead of that, we'll go through all the numbers, all my forecasts for earnings. Last quick thing, just major apologies for those of you that tuned into the live stream this morning. I had an echoing issue with my audio. It just built up and became so horrible. I'm so sorry for those of you that had to go through that. It's extremely embarrassing for me. We'll fix it for next time. But I did end up just taking that video down because of those issues at the beginning. So that's why we have this episode, but that will wrap it up for the weekend. Hope everybody has a great one. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I'll see you on Monday for the October 5th episode of Tesla Daily. Thank you.